Welcome to the Gold and Silver Club end of week review, non-farm payroll special for the 7th of February 2014, presented by myself, Phil Carr and Nick Housey at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will cover an end of week summary for gold, silver, oil, natural gas and the commodity currencies. We'll be reviewing top trades of the week. We'll be going through live market commentary and technical analysis. We'll be looking at the week ahead, so key events looking forward, and of course answering any of your questions as well. This week has been a very interesting week for gold, particularly as China have been off this week on their lunar bank holiday. So we'll take a look at how the price of gold has fared this week, and we'll look ahead and see how everything is lining up for non-farm payroll today. So commodity traders are eagerly awaiting US non-farm payroll data. The gold price booked mild gains this week as traders await the release of US non-farm payroll data for further cues on the US economy and the Federal Reserve monetary policy. This week, gold prices hit a fresh week high of 1,274 USD per ounce from the previous week's close of 1,242 before retreating back down to key technical support at 1,250. This week, gold has been supported by an outflow of capital from equities and emerging markets amid global economic concerns. The week's mix of US data has added to the trend, and as the Federal Reserve continues to taper, a wave of currency declines are hurting a number of emerging market economies, which include Brazil, Russia, India, and South Africa. So this has been prompting local investors to move their capital away from depreciating currencies into safe havens like gold. So on Tuesday, the US posted weaker than expected ADP unemployment data, suggesting the number of employed people fell to 175,000 in January, down from an estimate of 185,000, while the figure from the previous month was downwardly revised from 11,000 to 227,000. So non-farm payroll data is viewed as the most important indicator of the US labor market, and the indicator is projected to show a rise of 184,000 jobs added to non-farm payrolls in January, compared to a disappointing 74,000 posted the previous month. So we've got non-farm payrolls coming out in 2.5 hours' time. So we'll certainly be looking at the technicals very shortly, and we'll be talking through what we expect to potentially occur during the non-farm payroll announcement, answering any questions, and also looking at the week ahead, as well as reviewing our top trades this week. So before we do so, I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world: gold, silver, oil, natural gas, and the commodity currencies. I've also trained thousands of individuals to become independent traders and successfully manage their own investment portfolio, and I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Housey. Nick is a professional trader, investment analyst and speaker. Began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset, and tools that give any individual the definitive edge to trade in any economy, and also regularly writes for a number of global business and financial publications, and we've appeared frequently on financial television. So that's a bit of background on the Gold and Silver Club. So let's move over and we'll take a look at the gold price at the moment. Gold looking very interesting, not so far from its January highs here. So we're at $1,260 an ounce. So I think today's non-farm payroll announcement will be very interesting for gold here. We could get a breakout, or we could see some technical channels at the moment broken down and a move back towards the lows that we saw in the FOMC. So we'll definitely take a look at the technicals very shortly. Before we do so, we'll just talk you through top trades of this week. It's been another lucrative week on the commodities using the Gold and Silver Club's signature trading strategies. So first of all, we had a really nice setup earlier on in the week on natural gas. We had a breakout from a nice solid setup, a previous level of resistance as well, entering at 4.988, coming out there at 5.402 as shown on the chart. Profit on that, 41 points, nice tight risk on that, 20 points. So $200 risk for each lot traded for 41 points, $410 profit for a 2-to-1 on each lot traded on natural gas. We then had a nice move earlier on this week on gold as well overnight during the Asia Pacific market. We had another nice tight setup there for $1,254 an ounce was the entry there to exit at 1,272. So the risk 60 points or $600 for each lot traded for a profit of 180 points for a 3-to-1 to $1,800 profit for each lot traded on a nice gold day trade. Brent, crude oil and WTI both broken out to the upside today. So during this week, yesterday as well, we saw on crude oil inventories that there was a lack of inventories compared to the previous week, which is bullish for the price of oil. We initially got a bit of a retracement and then we were off to the races yesterday. So we had some really nice breakouts. We had, first of all, a move on Brent crude oil, a break above 105.55, as you can see on the chart there. The risk on that was 60 points for a profit of 120 points. Just yesterday, we came up and hit our profit target. So that was $1,190 profit for each lot traded for a 2-to-1. And WTI also broke out. Really nice risk to reward on that too, entering at 97.50, just off a key trend line and off a key support for a exit at 98.74. So the profit on that trade, 124 points, 40 points risk for each lot traded. So $400 risk for 124 points profit, $1,240 profit for a nice 3-to-1 there on WTI crude oil. So those are some of the top trades that we've had this week. What we'll do now, we'll move over to the live charts. We've got some interesting technical patterns starting to form here, so just prior to non-farm payroll. So we're going to take a look and we'll talk you through what we're expecting. Okay, the first market we're going to start off with is going to be Australian US dollar. Australian US dollar over the last week, we can see that we've had, in fact, we finally actually managed to break above the 50-day moving average, which is a very key level for any market, and particularly we can see here, once the Australian US dollar managed to do this, which was early in the week, midweek on Wednesday, we followed through and we had a nice move all the way up to a next key level of resistance here. Australian US dollar is now crossed over on a number of different moving averages here. We had a huge surge on Tuesday and that has continued to follow through this week. For those of you who are looking at Australian US dollar, and this has got a strong correlation to the gold and metals as well, we can see there's a very clear trend channel starting to appear here on Australian US dollar just on the 4-hour time frame. We've been, ever since we broke out earlier on in the week on Tuesday, we've been developing this trend channel. So in terms of the non-farm payroll, what I'd be looking for is we've actually got some quite tight entry points at the moment for a long, but I'd still like to see, you may be long already on Australian US dollar just purely because we've had such a good breakout this week. We've finally got above the 200-day moving average, and the momentum at the moment seems to indicate that we might be about to reach a bottom here for the time being on Australian US dollar. So for those of you who might have positions already on Australian US dollar, this is a trend line which I would bear in mind prior to the non-farm payroll. I'd be looking here for a potential move back up to the resistance channel of this trend line. So we've come down, we've tested the lower end of this. So if we get some negative data here for the US dollar, we could see the Australian US dollar inversely just break out to the upside. If the data is particularly strong for non-farm payrolls today and we see a surge in the US dollar index, this will put pressure on Australian dollar, on gold, on silver, and we could see some breaks to the downside, in which case I'll be looking for a break of this upward trending trend channel and also a break of Fibonacci's here about 0.9921. So the way I really see this moving is either we're going to get a breakout to the upside, we're going to get an extended move and possibly a breakout beyond this upward trend line here, upward trending trend channel, and we could see a move back up to the next Fibonacci level, even if we break out higher. So at 0.90783 is one scenario I could see here. That would give a very good risk to reward from where we are at the moment. The other move I see happening is that the news is very strong for the dollar and the US economy, and we see therefore Australian US dollar sell off, a lot of profit taking, a lot of stops get taken out. We could see a retracement back to around the previous resistance level, which got broken out, which is 0.88719. So I see the price really on Australian US dollar breaking out in either direction at the moment. You can see prior to non-farm payroll, it's looking strong actually for a potential move to the upside here. So this consolidation, which is starting to break out to the upside, but of course we need to wait for further news just to confirm the move. But those are the two ways I see Australian US dollar breaking out at the moment. If we take a look at Brent and WTI, with WTI forming a perfect trend channel at the moment, we've been moving really nicely off that. We came down, retested it on the oil inventory, provided another opportunity to go long. This looks pretty good, to be honest, for an entry point here, just a bounce off 97, a bounce off the trend line. However, anything can happen on non-farm payroll, which isn't too far away. It's only a couple of hours away. So I would, again, we're at a key event area, so I think on what we see here is a breakout in either direction as well, to be decided very simply by non-farm payroll. Either a breakdown lower, come down, retest 96 fib level. Should be about 100-point move lower from where we are at the moment, or we get a break to the upside and we come up and have a retest of 97, 87, 99. We'll be really looking just above here, around the 99 to 99.50 level, which will be the upper end of this trend channel at the moment. So that's looking pretty good on WTI if we get a positive move to the upside. But you can see the move already for today, it's very muted. Average volatility on oil is normally about 150 to 200 points. So which way are we going to move 200 points today? Are we going to get a breakdown to the downside, come back, break this trend line, or are we going to get a nice move to the upside and we're going to come up and retest this 99.50 Fibonacci? So that's what I'd be very interested in. So there's a lot to be paying attention to today on the commodities. Brent doing pretty well as well. So Brent at the moment, we've had some nice moves since Wednesday's oil inventories. We provided, based on the daily charts, we've had some really good entry points. You can see going out to the weekly, we've got a major trend line which has been in place, which the market closed above this week again. So we've potentially got a lot further to go to the upside on Brent here. I'll be looking at key levels above 106.87. So for a breakout above that point, come up, retest the 200-day moving average around 107. And ultimately, I'll be looking for a long to target 108.43, which has been a major resistance level throughout January. So that's what I'll be looking at for best possible scenario here for a breakout to the upside, which would be about 150-point move up to 108.43. Otherwise, any retracements, or could see a retest of 105.76 here, or even a retest of this trend channel below, which would be about 134 points lower from where we are right now. And finally, let's just take a look at the US dollar index too. So the US dollar index, at the moment is looking a bit precarious here. So it's right in the middle of its key moving averages. So we're likely to get a breakout in either direction here. Let's just put it on the 4-hour, see if we can get a bit better view. Market is definitely consolidating ahead of non-farm payroll. So we can see this little consolidation, little blip higher here, but nothing which is giving us any serious clues. Let's just zoom out a little bit further. There is a little bit of a trend line starting to develop here, but nothing too severe. So if we take a look, we'll just go out to the weekly for US dollar index. We can see that we're maintaining a very strong upward trending channel here on the weekly for the US dollar index. So really what the US dollar index needs to do is break through on the non-farm payroll for it to put a lot of pressure on gold and silver. It needs to break above really 81.50 to give it a clear move, get above the 200-day moving average, get a lot more traders interested in the US dollar index here. But it has been upward trending you can see there since the 20th of October, we're maintaining that upward trending channel. But there is definitely a key resistance around 81.33 and 81.50. So US dollar index needs to clear that in order to put pressure on gold, silver, and the other commodities, or Australian US dollar. So that's what we need to clear. If we do get negative news on the non-farm payroll for the US dollar index, we could see just a move back to the lower end of this trend line, which still wouldn't do any technical damage to it. We'd still be above last week's low. So if we just came down, retested around the 80.49 level here, it could even drop 100 points and still technically be okay on the weekly. So we may see that sort of a move, a retest towards this trend line, and we could see gold, silver just fly for the time being over the course of today and into the weekend, if we get that sort of scenario. So again, US dollar index is going to we're going to get a breakout in either direction. Either we're going to get a breakout above 81.50, or we're going to retrace probably back to the lower end of this trend channel around 80.49. So there's definitely plenty to be keeping our eye on today. Finally, we'll just take a quick look at natural gas. Natural gas had a nice spike midweek. We've actually come back and we've had quite a strong retracement today. We're just about coming to a key Fibonacci level of 4.722. Some key fib levels are starting to cross here. So natural gas potentially going to pull back. If it does get a break on the FOMC, we could get a break back to the 61.8 Fibonacci retracement, which is just below 4.53 and around the 50-day moving average. So if we do, you can see the market is just coming to test the previous resistance and recent support at 4.722. So again, I'd be looking for a potential breakdown, which would be giving us circa around about, let's have a look, 25 points to the next Fibonacci level, or a bounce off this level, in which case you need to go tighter on the time frames and be looking for a potential reversal back up to 5.10. Natural gas definitely going to be worth watching today whilst it's at that key event area. So we have non-farm payroll in 2 hours. There is certainly a lot of potential setups that we're seeing at the moment. So I think it's going to be quite a lucrative one, and that should definitely give you a good idea of all the technicals that we're going to consider. So with that, let's take a look. We'll just double check any of your questions which have come through at the moment. Okay, so the week ahead. So of course today we have at 1:30 p.m. GMT, 8 a.m. Eastern Time, US non-farm payroll. So non-farm payroll measures the change in the number of people employed during the previous month, excluding the farming industry. So job creation is the foremost indicator of consumer spending, which accounts for the majority of economic activity. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. So we can potentially expect a breakout in either direction on the US dollar index based on this announcement, and we should get a breakout in either direction on gold as well. So at the technical levels we've just been taking a look at. Moving into next week, so after non-farm payroll has finished, the next key news announcements we'll be looking at next week. Of course, we've got the oil inventories next Wednesday at 3:30 p.m. GMT, 10:30 a.m. Eastern Time. This data reports the number of barrels of crude oil commercial firms have in inventory. Commercial firms report their inventory levels to the Energy Information Administration on a weekly basis. So we certainly saw some more volatile moves this week as well. Higher than expected readings should be taken as bearish for crude oil, while a lower than expected reading should be taken as bullish. And then on Thursday, the 13th of February, we have US core retail sales. So that will be next Thursday at 1:30 p.m. GMT, 8 a.m. Eastern Time. This report measures the change in the total value of sales at the retail level in the US, and that's an important indicator of consumer spending, and is also considered as a pace indicator for the US economy. So a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. And other major news announcements later on in the week include, we've got 3:30 p.m. on Thursday, 10:30 a.m. Eastern Time, we have a US natural gas storage report. So the Energy Information Administration, they provide the natural gas storage report measuring the change in the number of cubic feet of natural gas held in underground storage during the past week. So that does have a major impact on natural gas. Yesterday's inventories that we received were bearish for natural gas. We've seen a nice pullback since that announcement came out. While this is a US indicator, it also tends to have a great impact on the USD Canadian dollar due to Canada's sizable energy sector. Next Friday at 2 a.m. GMT, 9 p.m. Eastern Time, we have the Chinese CPI, and that is the Consumer Price Index, measuring the change in the price of goods and services from the perspective of the consumer. So it's a key way to measure changes in purchasing trends and inflation. China is a big buyer of gold, silver, copper, and oil, so a stronger than expected number should be taken as positive for the metals and energies, and a lower than expected number should be taken as negative. And then next Friday, the 14th of February, 2:55 a.m. GMT, 9:55 Eastern Time, is the Michigan Consumer Sentiment. So that index rates the relative level of current and future economic conditions. There are two versions of this data released 2 weeks apart. The preliminary data tends to have a greater impact, so a higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. So those are the major really commodity news announcements that will affect the commodity markets over the next week. The one in prime focus today, of course, being non-farm payroll, which is in 2 hours' time. If you would like to take your trading to the next level and learn the exclusive and tailored Gold and Silver Club strategies, you can find out more about that at the following link, which is www.jointhegoldandsilverclub.com. You can find out about our exclusive inner circle, our live trading room, and also how to join our Gold and Silver Club 1 day and 2 day masterclass workshop. So you can very simply either apply via the link above or call us on 0207 193 0403 for London office. For New York office, +1 646 808 0403, or Johannesburg office, +27 11 083 8403, or just email us at office@thegoldandsilverclub.com. And of course, take advantage of our newsletter to get free weekly gold, silver, oil, commodity currency news, live market analysis and prices. So 2 hours time, we have non-farm payroll, so I would definitely encourage everyone to do a little bit of preparation, bit of planning before this major news announcement. Work out all your key technical levels, the markets that you want to trade prior to this, and really have a plan for the announcement. And we wish you luck with that. And of course, have a good weekend. We'll catch you back here at the same time as always, and the following week. And if you need anything, get in touch with us on the numbers on the screen. Okay, everybody, take care. Have a good luck with today's non-farm payroll, and we'll see you on the next one. Cheers, everybody. Bye-bye.